What's going on, everybody? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going to go over AT&T's fourth quarter and full year results, earning results, and we're also going to go over whether I am buying more, if I'm selling, or what I'm doing with my AT&T position. But with that being said, if you guys are hyped for this video, please make sure you are smashing that like button. I really do appreciate it. Also, if you want to join the family, I do post videos like this one where I do stock analysis and a lot of dividend investing where I show you my in-depth portfolio. And if that interests you and you want to follow my journey and continue with your journey as well, make sure you consider hitting that subscribe button down below. But enough talk. Now let's get right into AT&T. So AT&T had revenue of $41 billion. They had reported earnings per share of 69 cents compared to $1.95 in the year ago, which included non-cash charges. They had an adjusted earnings per share of 78 cents compared to 75 cents in the year ago quarter. They have $11.3 billion in cash, free cash flow, and cash from operations, and $8.7 billion in free cash flow. They had capital expenditure of $3.8 billion, gross capital investment of $4.9 billion, and cash content spend of $4.6 billion. And now going for the whole year, they had consolidated revenues of $168.9 billion, reported earnings per share of $2.76 compared to 75 cents in the prior year, which included non-cash charges, adjusted earnings per share of $3.40 compared to $3.18 in the prior year, $42 billion cash from operations, $16.5 billion gross capital investment of $21.6 billion, and free cash flow of $26.8 billion. Total dividend payout ratio of 56%. So if you ask me, AT&T had pretty awesome earnings. So why did the stock crash after it did announce these earnings, right? So in the past month, AT&T is still up about 1.5%. In the past 5 days, it's down almost 6%. So this is where earnings was, and it did dip all the way down to the $24 range, and it did recover a little bit. So why, if it had such great earnings, why did AT&T share price drop? Well, the CEO said something a little that confusing to investors, and a lot of AT&T ownership is retail investors. So with the spin-off that they're doing, or the split-off that they are doing with Warner Discovery, with their Discovery, they're going to spin off their Warner part of their business with Discovery. We don't know if the shareholders are going to get extra shares in this new spin-off company, or if they are going to split the shares and then you have to choose which one you want between Warner Discovery or AT&T. So for me, as a shareholder and an investor in AT&T, I want shares of both, right? So I want to gain some shares from my AT&T position without having to put more money in. That would be my priority, and the CEO does not know which one he is leaning towards in order when this deal does go through. So that is a little bit of uncertainty there, which is why the share price dropped. But I am going to be purchasing more AT&T. I do love the stock. I am receiving a dividend from it on February 1st, where I'll be able to purchase 2 more shares from that dividend. But let's hop into AT&T and look at some of their stats. So going over their dividends, they do have an 8.25% yield. Now this is expected to drop once their spin-off / merger is complete. It's going to drop to about 4 to 5% or so. They have an annual payout of $2.08 per share per year. Again, that's going to drop. A payout ratio of 66.48%, which is pretty decent even with this high ratio. A 5-year dividend growth rate of just 1.5%. So they do pay on a quarterly frequency. And right now they are paying 52 cents per share per quarter. So that is, like I said, that is going to drop. But even with a 4 to 5% dividend yield, this is still a very attractive and stock, a dividend yield that beats the market, the overall market. So that is not what is sending me away. Obviously, I do like the 8% yield, but I think this will be good for the company, help them pay off some of their debt, and I do think it will benefit the shareholders as well. That's something that the CEO was very confident on, that he wanted to benefit the shareholders. That is most of his goals. It's just how he can benefit these shareholders. So hopping more into the numbers here, let's take a look at how many shares outstanding AT&T has and whether if their shares have been decreasing. Now, I have done a couple of AT&T stock analysis before, but if you guys want to go watch that, you guys can go take a look at those. But I do want to check out some other financials that I have already spoken about, just to keep that updated in this video as well. So let's take a look at their total outstanding shares here after we go to their financial statements. So here we have total outstanding shares of about 7.14 billion, which is up from 5 years ago, right? So 5 years ago it had 6.14 billion, but now it is up. So that is a X right there. So not something you want to see. After this spinoff is complete and this merger is complete, I do think they will start to buy back some shares and increase some shareholder value. But they do have a market cap right now of about $180 billion with a price to cash flow of 4.29, so pretty low there. It's a pretty low multiple. A PE ratio of just about 9, which is also very low. They have revenue growth of negative 1.69%, not something you like to see there. With total cash on hand of $21.17 billion and free cash flow of almost $40 billion, around $38 billion. So pretty good there with this growing dividend, or, well, I guess they're decreasing this dividend, but they do have the opportunity to grow this dividend after they complete the merger and the spinoff. And right now, Discovery is worth less than Netflix. It's worth less than at a lower multiple than Netflix is, which I do not agree that it should be at the same multiple, but I do think that it should definitely be closer in value than what it is right now. So I do think there's some growth in their streaming sector as well, in their streaming portion of the business. So what am I doing with AT&T? Like I said, right now my average cost is sitting around $26 and change. I will be buying more. I love AT&T. I think this business is going to really do really well after the merger. And it's a risk, but I think the risk is going to pay off. Now, the share price is down about 40% in the past 5 years, which is definitely not something you want to see. But it's trading at such a low multiple right now, I am not worried about it decreasing that much more. Right here, I found the bottom at around $22 a share. So I think that is going to be the lowest point. Obviously, it could still come down, and anything lower than 25, I'm going to be eating up a bunch of shares at those levels, just because I think it is such a great value, and it's valued at such a low multiple because of the potential risk and downside. But that is going to wrap up today's video. If you guys can, just please make sure you smash that like button. Let me know down in the comments below what you guys think about AT&T stock. Also, hit that subscribe button if you guys did enjoy the video. And I will see you guys in the next one. I appreciate you all for watching. Peace.